equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in 15 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. You've got that intro down pat at this point.
I was actually thinking about on the way home, do I change it up?
Nah, keep it going for a little while, because there's probably a real fan out there imitating,
There might well be.
mouthing the whole intro.
Yeah, it could really throw some people off if I change it up.
Yeah.
Who knows? One day maybe.
Yeah, surprise us one day with it. Don't even tell me, just do it.
Wow, you make me speechless.
I might be.
No, that's impossible. Oh, well, big day. I've actually cracked a beer. It's been a pretty solid day for the retail world, hasn't it?
What's been happening?
Oh, just one of those days, But I'm glad that we're talking about this. I always love talking stocks, so got me in a good mood.
Yeah, that's good. That's good.
So, speaking of good moods, Ren, we have something exciting to share with all of our equity mates out there, and something we've been working on for about a month now with Beta Shares, who we did an interview with, a 3-part series on ETFs. If anyone hasn't listened to it, definitely go back and listen to that 3-part series. We thought it was a cracker, but we've got some exciting news to share, Ren.
We do. So the good news is we've been doing this podcast for a little while, and we've been talking to people through their computers or through their phones, I guess. Coming up in early September, we'll have our first opportunity to speak to some people face to face.
Yes.
We'll be doing an event in Sydney and an event in Melbourne with Beta Shares.
Yes.
Around finance goals, financial freedom, and you've got the actual title of the event. It escapes me at the moment, but it's just about talking about ways to achieve your financial goals and some of the things that we've learned along the way.
Yeah. So essentially, we're going to be sitting down with Beta Shares, and this is an event put on by them and General Assembly, which some of you may have heard of. General Assembly is an organization that hosts a lot of events, educational events, ranging from everything, marketing, social media, UX design, and a lot of finance stuff as well. So we've been very fortunate enough to be invited along by Beta Shares. The night is called #Finance Goals, Make Your Money Grow With You. And they're bringing together investing experts and some of the members of the Beta Shares ETFs team. Obviously, their CEO is Elon, and he's going to be there talking all things ETF. The theme of the night is going to be Investing 101, breaking it down so you can start to build up. What the hell are ETFs? The essentials about exchange-traded funds. And then he's going to do a bit of a discussion around 3 investing ideas for the 21st century, similar to what we spoke to him about on our podcast. So he's going to be talking about how to invest in the new economy, looking at things like global technology, cybersecurity, and ethical warriors. But the best part, Ren, is that it's going to follow with a masterclass from us.
Yeah, so he's our warm-up act, I guess.
Yeah. So we're then going to be coming on and sharing essentially the highs and lows of our investing journey since, you started in early university and I started a bit before that. We're going to be talking about some of the major lessons we've learned, the pros and cons of investing, and all that sort of stuff. So it's going to be a cracker of a night. We're starting in Melbourne on Wednesday, the 5th of September in William Street. It's a free event. Anyone can come, and it is going to be running from 6 till 8 p.m. And it's going to be awesome, Ren. We're really excited. Great opportunity to either meet some listeners or meet a whole new audience together. There is going to be one in Sydney the following Thursday, the 13th. So we'll continue to plug this until that event happens. Pretty pumped, Ren.
Yeah. You'll be hearing more and more about it over the coming weeks, so we won't overdo it now, but you can sign up. By the time this episode comes out, we'll have shared it on our social media. So jump onto our Twitter, our Facebook, or our recently produced Instagram, which Bryce is absolutely pumping at the moment. Click on the link.
I forgot to do one today.
Oh, no. Yeah, click on the link, reserve your seat. It should be a good night.
Yeah.
If nothing else, you'll learn something from the Beta Shares guys and laugh at us as we flounder around on stage for a little while.
Yeah, we will have a song and dance prepared.
Yeah. That's false advertising. We won't.
Yeah, true. Okay, Ren, enough of chit chat. Let's get stuck into it. We're going to do a Basics 101 for everyone today. We're going to revisit something that we spoke about way back at the start of the whole Equity Mates adventure. And we thought it would be a good idea to start revisiting some of these things, especially as we've got a whole bunch of new listeners on since then.
Yeah, well, and this has also been driven by some listener contacts over social media and email and stuff. We've got a bunch of questions around platforms, investing platforms, what the differences are, what we use, what people should be thinking about when they're choosing which one to sign up to. And we've talked about it a little bit. We've obviously done a bit of work with Stake, but we thought it might be good to just dedicate a little bit of time for going from the basics and talking about what we look for, what other people might look for, and hopefully giving people the information that they need.
Yeah, nice. So in my mind, Ren, there's sort of three ways that you can buy stocks, because that's essentially what we're talking about here. We're talking about broking platforms, meaning how you can access the ability to buy stocks. And in my mind, you've got the big banks, and they provide services online. Then you've got online-only brokers. Obviously, they don't have a shop front or anything like that. And then you've got the ability to access stocks through passive sort of microfinancing apps, which we've touched on a lot. So we'll probably focus more on the first two. Would you agree?
Yeah, 100%. And then there's also the fourth category, which is the broker that you call at your big investment bank. But I think they're probably going the way of the typewriter. Yeah, I think, when you look at someone like Andrew Brown, who just uses online investment platforms most of the time, the broker that you're calling up and asking to place trades for you is probably outdated.
Taking you for a ride.
Yeah, that as well.
All right, Ren, well, let's start with the banks. It's pretty straightforward. In Australia, you've got the four big banks: ANZ, Commonwealth, Westpac, and NAB.
Good.
And they all have their own trading platforms.
Yeah, and Macquarie as well do.
Oh, sorry, and Macquarie, yeah. And I guess I started trading on Commonwealth CommSec, it's called, COMMSEC. I started trading on CommSec, and so did you, didn't you, Ren?
So did I. So before we go any further, why did you start trading on CommSec?
I started trading on CommSec because I originally signed up first with NabTrade, to be honest, got a feel for them, and then moved across to CommSec. I wasn't banking with either of the banks at the time, moved across to CommSec to just check it out, and I actually just liked the interface a bit better, and it provided a bit more information, most of which I had no idea what it was all about, but I thought, hey, I may as well pay for something that I feel like has a bit more information, and that's how I got started. I didn't know anything else, really. That was probably the other thing. There wasn't anything else out there that caught my attention, and I honestly didn't put much thought into it.
Fair enough.
What about you?
Once again, your answer is a little bit more considered than mine. I started with CommSec just because I banked with CommSec, and it was just easy. It was all connected already.
Well, that's their goal, I guess.
Yeah. So yeah, let's start with what the big banks might offer.
Yeah, let's do fees. So you pay a fee every time that you make a trade with these banks, and the fees obviously differ between all four of them. I think the highest fee, Ren, that we found was CommSec. Correct me if I'm wrong. We've got $19.95 for every trade up to $10,000 in value. And to you and I, that's very expensive. Yeah,
it is. It's the big banks are the most expensive of the options that you'll come across. And, there's a number of reasons for that. They were obviously first on the scene. That's sort of the prices they charge. They've been undercut more recently by their competitors. Interestingly enough, they don't actually make money from the brokerage. They make money from the cash sitting in the brokerage accounts. But that's really neither here nor there for our purposes.
Yeah. And I guess they can charge that amount because they've got people like you, Ren, unfortunately, who just do it out of convenience, much like many people do their mortgages out of convenience and don't shop around. So
yeah, 100%. And as much as, we say that and we laugh about it, that, I'm lazy and I didn't shop around. If you choose to pay the higher brokerage because of the ease of use, because it means you can transfer immediately, because all of your money is contained in one app and one banking statement, like there are definitely reasons why you would do it just for ease of use. So yeah, look, as much as you might be paying, $10, $15 extra a trade, it isn't a bad decision if that's the decision you want to make. I guess the important thing is that you make the decision knowing why you're making that decision and that you are paying a little bit more.
Yeah, I mean, we both started in CommSec, so we can't really talk.
To be honest, I've actually still got my CommSec account and I've still got a bunch of shares in CommSec just because I bought them and I don't want to sell them and transfer them. I'm just happy to leave them there.
Likewise. Yeah, I've got mine there. I honestly haven't traded in or out of of CommBank for a while. Anyway, so that's CommBank. I'm looking at Westpac at the moment as well, and they've also got a $19.95 trading brokerage. That's if you have a Westpac investment account. If you have any bank account, it's $29.95 for an internet trading brokerage. So they're cooked.
It's expensive.
Yeah.
Big banks are the most expensive. The next category, which you talked about, were the sort of the young internet upstarts, the competitors that have come on the scene recently.
Yep.
And we both have accounts with one particular one of them.
Yes. These are the up-and-coming ones, as you said, and they're becoming more and more present and capturing a fair bit of the market. As you said, Andrew Brown banks with these guys. So you and I, Ren, both trade with IG. They're the cheapest we found at the time. They trade, their brokerage fee is $8 per trade, so significantly less than the big banks. And they are online only. There's no branches or anything like that. And they purely are just a trading platform, don't offer you the bells and whistles or anything like that. And yeah, we're happy.
Yeah. There's a bunch of others that all sort of charge around that rate. CMC is another big one that charges about $11. There's a couple of others. E-Trade, I think you found, that was about $6. Self-Wealth, $9.50. I've just got a list here. Saxo Capital Markets, $7. There's a lot. Their functionality and what they offer is all very similar. And they're all about half the price of the big banks. So that's the main attraction.
Yeah, so I think the message here, and as you said, obviously a little less convenient than if you're doing it through your own bank, because you've obviously got to set up accounts with these guys and then move money across from your normal bank account. But if you just treat it like an everyday account and just send money over there whenever you can, then it's going to be sitting in there and you can trade on it whenever you like. But I think the message that we spoke about, Ren, was that you should, if you have the ability to spend some time looking at these online ones, because that's where you're going to definitely find the most value, particularly if you're putting in trades that are only, $500 to $1,000. You don't want to be paying $20 on a trade, because as a percentage, that's just ridiculous.
100%. And that probably gets to the third category that we're going to talk about today, which is the ones where you pay no brokerage or next to no brokerage.
Yeah, so you've got the likes of Stake, which we've obviously been plugging a lot on the show because we love them.
To give you the details, Stake charges no brokerage, but they do make money. They're not a charity. So the way that they make money is when you exchange your dollars, Aussie dollars into US dollars, the exchange rate they give you is a little bit worse than the market rate, and they make that difference there.
Yeah, but it's not significant. And if you can trade in and out for zero brokerage, then it's definitely a win. Also, low brokerage, you've got the likes of your small micro investing apps like Acorns and that's Raise.
Well, Acorns if you're American, I guess.
If you're American, yes. Spaceship. But again, these are a bit different because you're not actually buying your own stocks. You're just paying a fee and putting it into these apps, and they're doing all the purchasing in the background. So, Ren, without going into too much detail on all of these, I think the main message, as I said, is those are sort of the three broad-based platforms that you can have a look at.
Yep. We mainly focused on brokerage, but there are some other key features that will differ from each broker and each set of brokers. So the big banks, one thing that they do offer is brokerage reports, company reports, analyst reports, things that are over and above what you might expect from the company to report. And you get that for free, or you get that if you do a certain number of trades. So a lot of people consider they pay the extra brokerage, but they get this information that they wouldn't get otherwise. You don't really get that from the others. And then some of the other things that you might want to consider and you might want to weigh up are the range of things that are traded. So as you were saying, with the micro investing apps, you really just get basic index funds, if that. Whereas with some of the online brokers, you get stocks, you get contracts for difference, you get options, stuff like that. One thing that IG doesn't do a lot of is bonds. Most bonds are over the counter, but IG doesn't really do any. It doesn't even do hybrids, which are bonds that are traded on the stock exchange. So without getting too into the weeds, if you care about the range of what you can trade, that's definitely something to consider.
And also international.
Yeah, 100%.
Shares.
Yeah. So, for example, Stake, you can only trade American shares, whereas IG, you can trade, I think it's 16 or 17 major markets.
Yeah,
so
it's good.
Yeah, there's just a bit of range.
Huge options.
And then for some of the banks, because most of them are Australian banks, there might be a different price for Australian shares and overseas shares, whereas with something like IG, and I think with CMC as well, it's just a flat rate regardless of what market you're trading in. And the last factor, so the three main ones we've talked about are the price, so your brokerage, the information you get, and the range, what you can trade. And then the last one that you might want to consider is the services it offers. So, for example, the big banks, if you bank with them as well, it makes it a lot easier around tax time. They'll give you some neat tax summaries and stuff like that. Customer service will probably be a lot better. Although, they're the Australian big banks, so maybe not.
Debatable, yeah.
IG's customer service is actually pretty bang on. I haven't tried too many of the other new online ones. You might care about the services like fast deposits, quick withdrawals, customer service, being able to call someone and speak to them. You might care about sort of tax time and neat summaries and stuff like that. So for me, they're the four things I jotted down in terms of the factors that you would want to consider when you think about the different brokerage platforms.
Yeah, agreed. And obviously your preferences change over time. So as you've probably heard, Ren and I have, at least three now that we trade with.
I've got three, yeah.
Yeah, same. CommSec, IG, and Stake. Money in all of them. So there's nothing stopping you trialing some. And then as your preferences change and you get an understanding for what helps you trade and invest, then you can find a platform that suits your needs. But I guess for a beginner, my main message is if you can avoid paying high fees, then do so until you understand what you kind of want out of a platform, and then find that.
Yeah, 100%. And don't take the fact that we have fallen into the same brokerage platforms. Don't take that as a indication that they're the best.
Yeah, absolutely.
It's just a coincidence more than anything.
Yeah. So that's it, Ren. I've actually had a blog post sitting in our drafts for about a year now since we last did an episode on this. So I'll make a commitment to get that done in the next week and get that up so we can give a bit more detail about some of these platforms. But yeah, I think we've covered everything off reasonably well. Just get out there. There's a lot of comparison websites. Finder will do something for this, and it's not very hard to find the fees and what additional extras they offer.
Yeah, 100%. And if you haven't already, while you've been listening to this episode, make sure you go and sign up for our Melbourne or Sydney show. Or if you're a massive fan, you could sign up for both and travel down or travel up.
Yeah, fly with us. We're not going to pay for you, but we'll tell you our flight number and you can come on board.
If you come and introduce yourself to us at both shows, we'll give you a shout out in the next podcast.
And a t-shirt.
And a t-shirt.
First ever.
Yeah, look, we'll give you a t-shirt, we'll give you a hat.
Hang on, don't overcommit.
What else can we give them?
No, let's keep it with that.
All right, yeah, but make sure you sign up. If we haven't convinced you already, we'll convince you over the next 6 or 7 podcasts until the events actually happen.
True.
All right, until next time.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested-related content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. We hate spam. It's once a week, and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.